Hi, thanks for joining me on my market report. My name is Mike, and my market report is on what drives mortgage rates on a daily basis. We kind of get into what economic data, whether it's headline news or geopolitical, or even just kind of market sentiment that's out there that might be impacting rates on any given day. Now, we kind of like to give you this information if you're in the process of looking for a refinance or purchase. Uh, this is a great video for you to watch so that way you can give yourself an idea where rates are moving and if it's the right time for you to refinance or at least consider refinancing. A little bit about myself is I am a loan officer. I do work with National Lender. If you're looking to refinance or purchase, we'd love to earn your business, so please reach out to us. At least give us a shot. In the meantime, why don't we jump right into this report? And we'll start off with the economic data for today. It's a light day today. We just have factory orders for the month of August. So July, it was revised higher from 0.4% to 0.7%. Forecast is supposed to increase that uh, month over month to 1%, and it came in a little hotter at 1.2%. So we've been kind of seeing that with manufacturing, which has been really good of late. We have seen some come down a little bit, but it's still in very good territory in the 60s on some of the manufacturing indexes. So those are all pretty good right there. Now, headline news: stocks are taking a pretty big beating. We're getting to a point in the debt ceiling crisis that they're getting really kind of concerned. So a lot of investors are getting worried about that it's getting a little too close, and that there may be a default. So right now stocks are taking a little bit of a beating. There's a lot actually in the headline news right today. You got Evergrande kind of announcing that they might be dismantling some pieces of their selling pieces of their company out to pay off the debt that they have. They did miss the first two payments so far, but there is also a grace period, so they do have some time to, I guess, from my understanding, to go ahead and pay those. Then you also had a comment by, I believe it was the CEO for BioNTech, basically stating that we may need vaccine because of all the different mutations that the COVID could have, that we could need future vaccines in the future. So it doesn't sound like anything in the near future that this is going to be contained or obviously go to zero. We already have a few countries going to the direction of just going back to normal, just accepting that it's going to be here for the long term, like any flu that's out there. So whether it's great or not, that's what's kind of happening out there right now. What else is going on? There's China and U.S. are trying to talk about maybe revisiting some of the trade. Biden has kept uh, the tariffs on China as it is, and they've kind of threatened to maybe increase more tariffs because of China did not really meet any of the phase one on their side. So there could be some potential conflict down the road there as well. Um, so that's pretty much about it in those terms. And then let's take a look here at mortgage-backed securities. I'm going to spread this out so we can get a better view of it. Here's where it is over the past month. We're down only about 6 basis points. Excuse me. We ended up closing up 22 basis points on Friday, which is good news. I saw we had some really good days there. Today we're just down about 6 basis points, so it's not enough to make any change. So right now, pricing should remain unchanged from where we left off on Friday. Here's what it looked like so far today, out the volatility. So we've had some volatility here, as you can see here. This is what those candlesticks charts look like. Sorry about that. So we'll go back and show the yields here in a second here. All right. So I have to try to organize these. And then, as you can see here, here's the trying to break down to that 148. We were down a little bit earlier, like around 147-ish range, which is and even 145. I think it touched off the 145 range here as well, but has come back up a little bit above that. So we're still trying to break below this tech line, which is right around the 148, and hopefully get below that, and that could help us get back lower to where we were before. Now we are keeping this range. Now it could be going sideways and keeping this range. This could be the new range um, going forward as we get closer towards November, where it's expected that the Fed may start tapering. So we have to be a little bit cautious here as a result. Now, as for national averages for rates, we got the 15 years at 2.5, and 30 years at 3.15 here, as you can see. Or I'm sorry, 3.1, and then 2.5. So we did have some improvement from last week, as you saw. If you've been following that, that's been obviously good news right there. All right, folks. Hopefully this video served you well. If you guys got questions, please feel free to reach out. If you do like these videos, greatly appreciate if you can smash that like button. Certainly helps us out, and we do appreciate you guys watching. You guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye bye.